The Hedgeless Horseman here. It's May 19th, 2023. Appears to have been a pretty volatile market day today. I was mostly out for the day, but I took a look at gold, I don't know, several hours ago, and I think it was neutral, something like that. And all of a sudden, I checked Twitter, and there's a bunch of people bullish, talking about, I saw one tweet said that silver could go up 20% on Monday. It's like, okay, something must have happened, because the only time you see stuff like that is if metals are up today. Again, as per usual, if prices are up, and of course that is the reason. I mean, when it comes down to it, people sell or buy because they think somebody will sell lower tomorrow or buy higher tomorrow. That's it. I mean, that's basically what why this is a momentum driven market. That's how people think. That's the kind of the time span people have in their mind. It's like, and I sometimes do it myself. Like, I can buy something and think that, hey, I think this is cheap, or I don't know the company too well, but I think, hey, I think this is, it looks like it's gonna go up more, typically, because when you don't really have fundamental conviction what gets you to buy, that's FOMO. And then maybe you buy the local top or whatever, not much happens, and then you realize, or more you think about it, it's like, hey, I only bought this stock really because I thought it was going to go up tomorrow. And then you feel like a dumbass, and that's why I end up staying in my high conviction alpha place, or at least alpha place, mostly, where it's like, hey, the case has nothing to do with where I think the stock is going to go tomorrow or next week or next month. It is everything to do, or my conviction comes from, I think this company is going to be, if it's not worth a lot more than it's priced at right now, it's going to be worth a lot more than it's priced at today. That is the base case. That's what keeps me bullish at lows. I'm looking, a year ahead, or try to look a year ahead. Try to look at least a field season ahead, and obviously keeping in mind all the time that, the sentiment chart I always show, that, hey, it's just a matter of time before these juniors, before an ounce in the ground gets revalued from $10 to $50 per ounce. That is just a matter of time. So by definition, just if you want to be part of a mean reversion, the only thing you can do is wait for the mean reversion. It has nothing to do with the company fundamentals, but if you can get a mean reversion and you're somewhat correct on the that you bought very cheap companies, or that these companies are going to go up a lot in value because they're going to be doing stuff, drilling, then, I mean, yeah, you can have really spectacular returns. And of course, the only way to have such returns is if you buy as low as possible. But what always happens, like I said 100 times before, is that people sell low because they think it can always go lower. And they buy high because they can always go higher. That's why people buy, or that's why people get bullish when an up, let's say, you're sitting there, nothing has happened, you don't have a position in gold, all of a sudden gold is up at 1%. Why would you buy that? I mean, that's literally because you think it's going to go up more, because the 1% uptick has already happened. And why are you selling if it's down 1%? It's because you think it's going to go even lower. That's how people actually work in real in practice. Even though everybody hears the word sell, buy low, sell high, almost nobody actually does that. People were not happy to buy this, but all of a sudden here you can hear people being bullish on Twitter, etc. And I wouldn't be surprised that on to Monday we're gonna have a red day. So it's like, I mean, if there's one simple rule, it's like only buy on red days. I mean, there's a few things that's like possible to, I think, would greatly increase someone's long-term results by just adding on a few like strict rules, and just, if nothing else, see what happens within 2 years. Especially, I mean, if you have really poor returns, long-term returns, you might as well, you know, mix it up, because what you have been doing is obviously not working. So it's like just a simple thing like that, probably, who knows, maybe a lot better returns. Anyway, I mean, that's how the markets work. Okay, so Goliath out with a news release. Title was Goliath mobilizes for 18,000 meters of drilling, including maiden drill program on newly discovered gold swarm zone at Gold Digger project. Funny thing is, I hadn't looked at the market cap in Goliath I didn't have it in the front of my mind, let's say. It's like I'm pretty shocked that it's okay. I don't think the new share count is included here, but still, it's like when I saw it, 46 million Canadian for Goliath. I mean, that looks pretty crazy, and I mean, that's one of those funny things. It's like, again, if you look at the share price, it's like the share price swings, like 1.62 here and then down to 0.72. It's like, and here it was like 0.67. It's just crazy how much, you know, how these juniors can swing without much having really changed. And of course, I mean, sentiment kicks in, and boring period kicks in, you know, after the last, as the results are out from the last season, etc., and people expecting a financing. So it's like it's much easier to not take volatility personal if you start to understand. It's like, why is this happening? Okay, trend is down, which gets more people to sell rather than buy. Financing was coming up, okay, which makes it you know, a negative carrot dangling in front of the market. I mean, that's the perception, and another reason to sell. I mean, that's how it goes, and that's why when these juniors typically go down, they go, especially if, I mean, the cases are intact or they're really they're really cheap, etc. It's like legit juniors. The downtrends typically take them so much further down in price than it's like, I mean, it really makes no sense. But that's why you can even have Bear Creek, where nothing really changes except sentiment and metal prices, and that can go down 80-90% and then up 500%. Same company, no change really, no news that would warrant that. It's just sentiment and price and momentum then. So that's why it's like, when these units get cheap, they get absolutely ridiculously cheap, because the cheaper they get, the longer the downtrend, more people find a reason to sell instead of buy. So it's kind of weird. It's like, once they get cheap, they typically keep on getting super cheap. And then when, you know, the mean reversion happens, when the market corrects the mistakes eventually, when all the, let's say, weak hands have sold out, I mean, they can run, I mean, in a spectacular fashion, and then the dumb money comes in again at the top because they see such a strong trend to the upside that they're like, oh, okay, I'm buying now because somebody's gonna buy it high tomorrow, and one day that is the last dumb money. It's like one day the last dumb money or weak hand will sold the literal low, and maybe, you know, fast forward 2 years and that person just gave away a 400% return. I mean, returns you would dream about getting in 2 years. That's how it is. But anyway, so a lot of drilling, 70 holes from 21 separate drill pads. Interestingly, they've done I guess a schematic or a model, what they think the immediate shorebet zone potential is, and a nearby bonanza shear. and I just did a quick calculation assuming 2.7 specific gravity, that would come out to like 3 million ounces. And I haven't done the calculation on shorebed zone, but it's like, yeah, that would be around, I guess, 3 million ounces as well. Higher grade though. So maybe, 6 million ounce target here. And that's obviously on average. Like you can see, I mean, you'll have probably, which they've shown, that like some areas you might have, 16 grams per ton, and some areas you will have 1.5 grams per ton. So you won't be mining the 1.5 probably, but you'll be mining the 16 and make a lot of money, etc. But this is obviously an average they've used based on the drilling so far. So I mean, this is very much a legit discovery story. And they also have the gold swarm zone, which they will be testing. They have more targets as well, but it's like, yeah, underground mining, metallurgy looks really simple. Could have gravity assist because they would have a mine entrance, I think, at somewhere around, where would that be? Maybe here, something. So you'd have actual gravity assist, which is very unique. Who knows? Maybe really good margins, like the ounce per value per ounce would be really high here, and that's obviously something we'll hopefully find out one day. I just think that, I mean, 50 million Canadian for what looks to have a pretty good shot of actually becoming an underground ESG friendly mine in British Columbia with both gold and silver, with simple and cheap metallurgy, and possible gravity assist. I mean, what would a mine be worth actually that would work? At least 500 million, I would think, for a multi-million ounce mine, and depending on margins, of course. Yeah, so I mean, or in the next couple of years, I mean, if this ends up being a multi-million ounce, very economic gold silver mine, when we get into a high, good sentiment environment, I don't think 500 million would be out of the question. Maybe it's 3 years off, but it's like, yeah, 10-bagger potential for 3 years. I mean, that's the kind of stuff you dream about. And of course, is that a guarantee? No, but given that it appears that the shorebed zone specifically, or this area for some reason appears to be quite what's it called, homogenic, whatever. That's like, it's not too nuggety, even though you will have streaks of bonanza and non-bonanza. I think this is a good shot of becoming a mine one day, especially if they, I mean, the thought is that they will partner up with Dolly Warden and the likes, and actually have kind of a mining hub. So some of the parts might be greater than each individual part, but I mean, if you have a multi-million ounce mine here, it could last a few decades, I guess. I think Goliath is probably as, I mean, things happen. I mean, in a I was gonna say blue sky scenario, everything would obviously be even better, and every hole of the last season would have hit even better, etc. But it's like, price wise, it can only go down 100%, but risk reward comes, okay, how much do you gain if things turn out well and this becomes a legit gold silver deposit and someday a legit mine? I mean, I think there are pretty good odds here with for the, let's say, $50 million downside, and who knows, 500 million or plus upside. Honestly, I mean, if we go into a really hot environment and this is a multi-million ounce, and it's like, there's an economic study out, whatever, that suggests that this could be a high margin mine, I mean, 500 million is probably way too low in that case. And that's the beauty of it. It's like, well, the thing is, obviously, which is the hardest part, because you can see people bitch and whine about the market on a daily basis. Like, they're bullish one day on juniors, the next day they're already whining. It's like, I don't know how people think a multi-bagger or at least a 10-bagger, how that happens. I mean, that typically is something that happens over years, whereas it goes up, who knows, on average like 50% per year, and then you hold it long enough, then it's a 10-bagger. It's not an event, it's a process that if like Great Bear, if that deposit keeps growing with drilling, the value is going up. But they're not gonna prove to go from, let's say, 0 ounces to like 6 million ounces in one drill season or in 6 months or something like that. No, you'll get the receipt. It takes a long time to get the receipt, and if you were right early on and it does end up just growing and growing to some kind of economic scale and size and quality, etc., yeah, you're gonna end up with a multi-bagger probably. So that's the thing. You have to kind of time jump and think that, because personally I see no merit really in trying to guess every move. It's like, I mean, this is volatile quite a bit here. It's like, okay, I gotta get this move correct, and then I gotta get this move correct and this move correct, and then it turned, I mean, it's like what, like a triple top or something. I mean, how easy is that to trade? It's like I have no idea when it's gonna go up or down. But if you look at like on a year-to-year basis, like, yeah, okay, here we have, where's that, like 1 year here, and this is in a shitty market, I would point out. And here it's, you know, up a bit. I mean, in periodically it's up much more than that. And then a year it's like, what is it, like flat perhaps? Yeah, well, actually up a bit, and then now a downtrend. But it's like, people would bitch about this short, but it's like, if you held it over this period of time, it has greatly outperformed 90% of juniors, even though people look at this short and complain and think it sucks because it's down now. But it's like, if you're, what is it, 50? If you bought it like here and it's only at 59 cents, I don't have the Bear Creek Mining short, but I bet Bear Creek Mining's short is down a lot more than that, and many juniors are. So it's kind of the same with the Loro. It's like, you know, it's been consolidating for over a year now, I think. If you bought any of the tops, only the tops, yeah, things would be worse, obviously. That's also one thing I find. It's like typically, or I'm not going to say typically, but it's like, I invested, I don't remember when I got into, I think it was around here in Goliath or something. It's like, yeah, it looks good, etc. And then what typically happens, I think that happened with like Magna. It's like, you know, pounding the table on Magna at around 30 to 40 cents, somewhere around those lines in the beginning. And then it's because I was like, you know, this is so retardedly cheap. And still, it's like nobody really cares. And it stayed around 50 cents for a you know, a month or so, and I just, you know, kind of kept on buying. It's like, this is still retardedly cheap. Then it starts to go up, and all of a sudden people care. That's typically how it happens. Because I mean, I've been talking. I mean, I've been talking about a lot of what I see as no-brainers now. But it's like, yeah, nobody cares. Nothing really happened to the share price. So it's like, if I say, hey, this is obviously a no-brainer, and I show why it's a no-brainer, one would think like, oh, I bet somebody has at least some money or whatever to take advantage of an obvious opportunity. Well, like, no real change. But after they've gone up 50%, then all of a sudden everybody cares. And they really start to care up here. And sometimes, or a lot of the time, that's when people I mean, you can see the volumes here, for example. I mean, they tend to spike around, yeah. So then you really care, and then it's like people sometimes give me shit for like, well, this company sucks. It's like, yeah, but it's like, I didn't only buy or hold at the actual peak. It's like, get in as cheap as possible. Then you can afford to have big corrections along the way. So now I think it's gotten cheap again. It's like, do a lot of people care? I don't know. Don't think so. Eskay Mining, I talked about them on K Report today. Eskay has had a very rocky share price. This is, if I understand it, this has been a fund that's been liquidating. That's not something. If you're, I was going to say full investor, or whatever. I mean, it paints a very depressing chart, because if you have somebody that is forced to sell or whatever, and he's unwinding his entire position in a time where almost nobody is greedy on juniors overall, then you can, I mean, it looks almost like automated downtrend. So okay, so you have two examples like Goliath and Eskay. Both have been at higher levels, and now Eskay is down to level seen, I don't know, here basically, July 2020. I think it was around this period I first bought my Eskay position. Still, okay, not a pretty picture. I mean, for a while it's like, yeah, Eskay was the hottest stuff in the market, for kind of good reason. I mean, they had really good early results out of TV and Jeff, and everybody knows the potential price of another Eskay Creek, which would be worth many billions today. Anyway, so you get back to today. Okay, it's been punished more from the tops, and that's typically what people, I mean, if people throw shit on anyone, it's typically at the tops. And why do people do that? Because most people just buy the tops. That's typically how it is. I mean, you can see the volume spiking here. If you'd actually, I don't know, buy some correction, whatever, the position picture wouldn't look as bad. But Eskay has, obviously, I mean, it's not only, there's like only sentiment in this case, because they did a big drill program last year when they were trying to connect TV and Jeff, and that did not come up with the results that we were all hoping for. So things have changed. It's not like everything is not about sentiment or one fund liquidating or etc. etc. It's just that even unchanged stories could go down 50%, and the ones that have had a change story, for the negative, they'll go down even more. Again, in poor sentiment environments. In a good sentiment environments, you will see dog shit go up 500%. You will see stuff go up 30% on news that's not really worth anything, and it might already the stock might already be starting off from an overvaluation standpoint. That's how crazy this sector is. It overly punishes, quote, negative news in a poor sentiment environment, and stuff that is already way too cheap, and it might be pricing in a negative news release. That doesn't stop price from going down, because nobody, the sensitivity to disappointments is sky high, while the sensitivity to positive news is very subdued, meaning it takes a lot to get anybody greedy, but it doesn't take a lot to get someone more bearish. That's just how it is, because of the trends, etc. And the longer this keeps on going in juniors, etc., people's sensitivity to bearishness will go up and up and up, so they're going to be inclined to sell lower and lower and lower, and that's why you get such ridiculous prices. Eskay, yeah, story has changed. Well, story hasn't really changed, but last season, that was a disappointment for sure. It's easy to say in hindsight. I got asked by someone that, okay, do you think it was a bad decision what they did last year? And like I talked on K Report, it's not fair to say in hindsight. If I wasn't vocal, it's like, oh, you shouldn't, swing for the fences and try to connect TV and Jeff. No, I was for that, because, okay, we had I don't know what the market cap was around here, like 500 million or something. We had some shoes to fill, if you know what I mean. If they would have connected TV and Jeff and hit, similar hits to what they've hit at TV and Jeff, we would not be complaining now, and we would not be sitting at this price. So I can't just go back in hindsight and say, it's like, well, that was a dumb thing to do. I mean, that's the stuff you see all the time. Well, it's not like anybody on earth knew that when they did the decision. We have no... Investing is all about the future. The only thing one might, let's say, learn or ponder is like, maybe that was a rich valuation. Maybe the expectations were too high that it would be very hard to fill those shoes. That's a fair assessment. Because you never know. It's like Garibaldi. When that ran to 500 million or 550 million, whatever, without a single assay of their own at least, that looked absolutely ridiculous to me. But it just kept on going up. I mean, when it went to 300 million, that looked expensive. It just kept on going up. So it's easy to say, I mean, I remember it's like, my view is that, okay, too much is priced in. I mean, they really have to have something really, really good, and they don't even have a single drill hole. But what if they hit? What if they found another Voisey's Bay? Then even the people who were buying at 500 million without an assay, they might look smart today. Look smart. Was it smart? Who knows? I don't think so. But again, it's like, you never know what's gonna happen. We can only try to make the best risk-reward bets we can. That's it. When the results are out, etc., everybody is, of course, thinking that if it's good results, all the bulls were smart. If it's bad results, every bear was smart. That's not how it is. You never know exactly what's going to happen. So I can't say that every stock I bought that went up was a smart buy, or every stock that went down was a stupid buy. That's not how it works. Because if that's the case, if you see someone with super good results in one stock, meaning, okay, he looks to be super smart. If he was super smart, he would have superb returns over the a 10-year period. Almost nobody has that. But there's plenty of people who get lucky in a stock here or there. It's like, again, with Dogecoin. If you made money in Dogecoin, a lot of money perhaps, was that smart or not? Well, let's check in with that person's portfolio in 10 years and see how actually smart he was, and how much wasn't just dumb luck, like FOMOing, and then he had to sell for some reason or whatever. I bet there's a lot of people that on paper for a while was up in Dogecoin and thought they were absolute geniuses, and that most of them are broke right now. It's like the Reddit crowd for a while there, when they ran up some of the stocks and some people made a ton of money. I think vast majority gave it all back and then some. The only thing that matters is what your total portfolio will have returned at the end of days, basically. That's why I don't celebrate one stock going up too much, or first of all, it's like, even with the real success stories, like Snowline, for example, could you say for sure that was gonna go, I don't know what it went from the bottom, but it's like, 5 to 10 bag? Absolutely not. So how much credit do you think I was all in Snowline at the bottom? No, if I knew what was gonna happen, I would be all in. So sometimes you see people, they're celebrating. It's like, look how smart I was. This stock went up. I was in. Maybe they have a 1% position. Maybe they have a 0.5% position. You see a lot more people brag about individual picks than you see people brag about their portfolios. And why do you think that is? If they're so inclined to brag about individual picks, don't you think they would brag about their portfolio if their long-term portfolio returns were good? That's why it's also one thing to, like, when you get trolled by someone, because trolls typically are, bitter people. It's like there's a reason people are bitter, etc. It's not because things are going great. So it's like, yeah, if they're so smart, it's like they must have really, really good long-term results. But I have yet to see one troll post a chart of long-term portfolio. But they're very quick to point out if somebody is stupid because they have a stock that is down, or how smart they are that they had a stock that was up at least for a while. Yeah, so it's like SK. I mean, is this a slam dunk? I mean, I think it's a high risk, high reward story at this point in time, because again, we don't know the future. We know they're planning to drill test the geophysics targets at. Well, they have a bunch of targets. I mean, Maroon Cliffs. I don't know if they're going to be drilling Torn Lake, but Hexagon, Mercury, Maroon Cliffs, etc. So. This is not far away from Eskay Creek, obviously. You have those, similar kind of geophysics results, and this, whatever this is, and then you have that kind of ridge going up to the surface, and here it goes all the way up to these things here. So which could be, I mean, this could, I guess, be VMS mounts, etc. I don't know exactly, obviously. And Hexagon Mercury, I mean, this is because we know Lulu, I think that's had pretty good results. That's one of the known prospects, and it's like, lo and behold, it actually fits with this geophysics model. And Jeff North, this is where the carpet bombing took place, or part of the carpet bombing from last season. You can see that it's basically drilling a gap between where this geophysics model would suggest that there's a chance for, Eskay Creek type VMS mineralization. They didn't obviously have this model at that time. So it's like, with this model you wouldn't have drilled that. But it's like, in one sense one could perhaps say that, hey, okay, if the results were kind of getting worse this direction, and you see it's between a gap, and kind of the best results are over here, where it's actually this anomaly here actually goes up to near surface. I mean, the fact that they had hits here and didn't have too many hits here, I mean, that might again give some credit to the actual model, which means that, okay, the failure here, let's say, to hit a lot of economic mineralization might be a tip of the hat that, yes, this model is onto something. Here we have the Eskay Creek, obviously. So the interesting thing with this is, we know how valuable Eskay Creek was. We know that this blob here was worth like 3-4 billion, and what Skina has left is worth, I don't know, at least 1 billion, etc., probably more. So like this little thing here, was worth maybe 4 billion in total. Okay, so we know there's a huge price. We know the price of SK, that's 100 million. And we know what kind of prices could be found here, because Eskay Creek is an example of what was found here. And we know they have similar aged rocks in other places. They have, whatever fluids created Eskay Creek way back when, this whole area here was underwater and would have the similar fluids coming up. Now there might be other stuff that made Eskay Creek so insanely rich. I mean, 2 kilograms of silver per ton in the original Eskay Creek, and like 40-50 grams per ton gold. I mean, just absolutely insane grades. Okay, did something happen here? Is there a reason why this is unique perhaps in this district? Sure, absolutely, that's a possibility. But still, where those metals were sourced from, those sources should have been there when the other VMS deposits formed during the same time, when there were underwater vents spewing out these sulfides, etc., that created Eskay Creek. So if we just do a time jump, let's say 6 to 8 months in the future, and assuming they have indeed tested like Maroon Cliffs, maybe some more drilling around TV and Jeff closer to the actual, or at least Hexagon Mercury, which is I guess along the TV Jeff to Lulu trend, etc. There's a million scenarios that can happen, infinite amount of scenarios, infinite amount of actual assay results, etc. But with their, the more limited budget they'll use this year, of course there's also the potential that this geophysics model is kind of a shape or form something of a holy grail, that yes, this is actually good at identifying where there is VMS mineralization, where the best parts of the VMS mineralization might be. So the question is, okay, let's say they drill at Maroon Cliffs and they have some, even one really good hole, or two, or a few, or some mediocre. I mean, it's hard to hit the bullseye immediately, obviously, because it's like, even in Eskay Creek, first of all, it was a small deposit, and then, you could miss right next to it, so it's not like every single hole was a bullseye, because that was also faulted off, so it's like a stair step down, so you could miss it. On that point, I think they made the discovery at Eskay Creek after 109 holes, which kind of says something about how discreet these things can be. But like, if they drill one or more of these targets and get one good hole in one, or a few good holes, or a few decent holes, something that's like, yes, there is definitely appreciable gold there. This is, far away from background, even if it's, 5 meters, so 5 gram per ton AU equivalent. Sure, if the market sucks, that's probably not going to get anyone excited really, but it's like, if that could be called proof of concept, then they could obviously, all of a sudden, if they get proof of concept from just one place that this is actually seems to be good at spotting the, let's say, higher grade portions of a VMS system, or rich VMS targets or whatever, all of a sudden all those targets are live. So again, it's like there's a scenario where they come up with absolutely nothing, and I expect without a really good market, who knows, if we go into a better sentiment environment and we get, drilling is starting or whatever, who knows, maybe Eskay Creek will be up 50% from here without a single assay yet. So it at least will be, higher plateau, and if they drill absolute dusters in a really good sentiment environment, obviously the fall will be subdued, because people would still think, I think they would think that there's no way to kill all the targets here in one drill season with limited drilling. So it's like, it's obvious there's a bunch of potential left here. It's just that they haven't found where the best VMS deposits are, because we already know the TV and Jeff can deliver 10 meters of 35 gram per ton, 109 meters of 2.5 grams per ton, etc. Those are really good drill holes, so we know the potential to for that mineralization is live, and they've only explored obviously a postage stamp of this entire thing. It's only really TV and Jeff that have been somewhat drilled, and we also know that according to this schematic here, it's like at Jeff, for example, they appear to have drilled possibly the wrong way even. So that's like, if we know they have good stuff here, and we know TV has good stuff, and we know Sib and Lulu, that's already confirmed to have some really good intercepts. So we know there's high grade precious metal VMS horizons all over this area. But to my point again, it's like there's an endless different scenarios. We might have 0 new discoveries. We might have proof of concept that this model works, and we might have a, you know, unequivalent or whatever you call it. It's like no confusion, you know, they made a discovery hole at Maroon Cliffs or a few discovery holes or something, and they hit at Hexagon Mercury, etc. There's an endless range. We know what we're paying, 100 million. The question is like, I think it's a high risk, high reward bet. It's one of these where it's like, if there's a 30% chance of success, maybe Eskay Mining is actually quite cheap. I mean, if we're thinking from the aspect of, okay, how much of a Eskay Creek deposit is it pricing in? I mean, one could say it's like you know, 100 divided by 4,000, 100 million divided by 4 billion. That's not a lot at all. So it's like a very, very small chance, very, very small part of another Eskay Creek is priced in. And that's obviously where the risk reward comes from, because if they end up finding another Eskay Creek, this market cap could one day be at, who knows, $3-4 billion. The question is, what chance of success do they have? I don't know. Nobody knows. Only Mother Nature knows. Mother Nature knows exactly what is here or not. Mother Nature hasn't changed here in millions of years, so there might be an Eskay Creek here. Is there? I don't know. If it is, will they find it immediately? I don't know. And there might not be. There might not be one at Hexagon Mercury either. Those are the kind of uncertainties we're dealing with. But at least we know what we're dealing with. Like people say that exploration is the highest risk portion or subsector of the, you know, mining sector. That is sure, but still it's very simple to understand. Either they're gonna find something or not. And if they find something, if the price is large enough, you need one, if you have 10 different Eskay Mining stocks, and you know that the theoretical price is 3-4 billion, obviously it's like one that finds one of those would pay for the other 9, more than pay for the other 9 if they found nothing. Question is, or the problem is, we don't know which junior explorer is exactly gonna hit and find a billion dollar deposit. So we have to diversify when it's high risk, high reward, because we can't go all in. Even if a high risk, high reward play is the most obvious one. Even if Eskay Mining had a market cap of 10 million, and it had, let's say 20 million, it had 10 million in cash, could do a really good job. I mean, I would be knee deep in that one, but still, you wouldn't go all in, because even if the chance of success is still like 20-30%, yes, if they find something, you're gonna make a boatload, obviously. If they don't find something, maybe you'll have a 50%. You will have, you know, cut your portfolio in half. That's not too fun. So yeah, I think this is to sum up, I think this is a high risk, high reward story from here. And like I said here, we're either gonna have champagne or noodles, I think. I mean, there's obviously anything between. It's like, you know, they find some decent holes, so it's like, yeah, it's obvious there might be something there, but we won't find out until next drill season. Then, you know, I think it will do better than, you know, where it's at now, but it's like might not be the absolute, you know, like here it's like the, you know, 300% run. But if they actually make a discovery, I think all of a sudden, especially if it kind of looks a bit like the original Eskay Creek, then I think all hell could break loose if they find something more similar to what Magna Resources has, the remnants of Eskay Creek. I think it will do well if they find nothing at all, really, nothing that entices the market, and especially the worse the sentiment is, the more you need, obviously, to have the share price go up, because it's much harder to get people to buy anything if people found. People can barely get themselves to buy a stock in a company today which has as much cash as market cap. I mean, it really is bad. But still, it's like, I for sure don't know. I just know that there's definitely potential, and there's no way they can really kill the story even after this drill season. But the big thing I think will be, it's like to get some proof of concept that yes, this geophysics thing here, this model, it actually does work in identifying near surface VMS horizons in the Eskay Creek district. That would be a major thing, because again, if they have one proof of concept, let's say, all of a sudden every area where they have similar readings becomes live. So that could be really, really exciting. But that's not something to take to the bank, and that's why if they are successful, this is gonna look cheap. If they are not successful, it's probably going to look expensive, and I don't know which. Another one is like Magna Mining reports new assay results from Crane Hill. This was released, like a day ago? And this is the fascinating thing, I think, with, again, how this market works. They drilled 5 drill holes, complete on the G1 zone, and blah, blah, blah. So this was the best hole from the G1 zone out of 5 holes. 1% nickel. I don't know how much. I haven't done the calculation. 1% nickel, 0.8% Cu copper, 0.2 grams per ton platinum, palladium, and Au over 5.2 meters. I think this would be economically mined, because it's like, well, first of all, this is not true with though. I don't know what the AU equivalent is of this, but oh God, what was it like? It is, I think, 1% nickel is like 3-4 grams per ton gold equivalent, I think, and then you get the copper and then the PGMs. Not 100% sure, but this was obviously, 8 grams per ton platinum, palladium, and gold, plus 0.3% nickel, 0.2% nickel, 0.3% copper, or 28 meters. This alone is pretty goddamn impressive. Over this kind of whatever. It's like, and they have, like you see, these are the additional exploration targets. This is the funny thing. Magna actually went down on that news. It's like, why? I think people were like, because this is obviously a barn burner result, but it's like, okay, 5 drill holes on the new exploration target, and this is the best one, which is pretty decent at this depth, but it's like there were obviously I was gonna say close to dusters, but it's like length 3.3. This is okay, but it's kind of narrow. 0.6. From surface, that's actually pretty good. But no. Most of them are not barn burners. Anyway, it's like, given that Magna, in my opinion, is absolutely remarkably offensively cheap. They could have drilled pretty much 100% dusters, and this share price has no business going down. But that's why I keep saying it's all relative. Right now, according, like here, the enterprise value of Magna right now is within the implied value range of the Shakespeare deposit alone, according to the year-old MOU with Mitsui. So at face value, one could say that Magna Mining, at this market cap, with 20 million in cash, is only pricing in Shakespeare. The Shakespeare deposit, not even the greater Shakespeare project. So one might say Magna has, Magna is trading at pricing in a somewhat fair value to Shakespeare. The thing is obviously that it's Green Hill, which is the flagship project right now. So if you get that for free, and that is, I don't know, twice the resources or something, hundreds of pounds of nickel, hundreds of pounds of I don't remember how much copper and PGMs they have, but it's like, I think I did a calculation, like 8 million ounces AU equivalent, something like that. If you get that for free, why on earth does it matter if they don't, if they drill 5 holes on an exploration target, and 4 of the holes don't really show much? It's just absolutely ridiculous. But that's how it is. It's like, again, nobody thinks about price to value. If somebody, I don't believe there is a single soul that is selling right now that actually comes to the conclusion that I should sell Magna Mining at $0.7 per share because I think I'm overpaying for all their assets and the team and the money in the bank, etc., etc. No, it's just that, again, everything is relative, and the trend has been down since here. So, but the interesting thing, obviously, is that, like I said, the trend alone gets people more inclined to sell. People are more willing to sell here than here. Why? Because it's even cheaper here, so it would be, quote, dumber to sell here than here. So, I mean, stupidity kind of gets ramped up. People find more excuses to sell as it gets cheaper. And the interesting thing, I'm not saying it's going to happen the same way or anything like that, but it's like, look at the RSI here. It hit this level, which is the lowest level ever on the daily chart for Magna Mining since inception. That was here. What happened after it? Because this was a ridiculous price for Magna. Dirt cheap. Even if when they only had the Shakespeare deposit. We can look at the MOU. Yes, Mitsui says, I think this was like, 25-30% of what the MOU suggested, something like that. So like super cheap. Okay. Then, after it had hit this RSI, becomes so oversold, people finding the weirdest reasons to just sell, and obviously they sell more because trends down. Eventually, you run out of people who are willing. Nobody was willing to sell even cheaper here. So maybe the last weak hands or dumb money actually ran out of shares. So nobody left who owned shares were thinking that there is, I'm not parting with ownership of the Shakespeare asset at a lower price than this. This is absolutely ridiculous. Nope, I might sell one day, but it's not going to be at this level and certainly not lower. And somebody obviously thought, hey, looks super cheap, etc. So all of a sudden, out of the blue, you run out of weak hands, dumb money, and the bottom is in. That was around 15th of July 2020. So less than 6 months later, Magna Mining had gone up 533%. I'm not saying it's going to do 533% from whenever and at whatever price this correction ends at. But you can see again how ridiculously dislocated the valuations can get in this sector. From absolutely retardedly cheap, one day it just bottoms. Case start of an uptrend, all of a sudden you have momentum, and then everybody all of a sudden thinks, Well, now it's a great idea to buy it. I mean, I did buy it pretty much all the way up. Especially during the dips. Not huge amounts, but I've been adding a bit lately. And I had to sell some for, I think it was a few private placements or something. But this is still, I think, my second largest position. Yeah. It's the largest position in my tradable portfolios. I have one portfolio, I think that's like, I'm not going to say how much I have in Magna in that one, because that's going to maybe get someone else to be that kind of a risk fiend. Still, yeah, again, it's like absolutely no guarantees, but that's how this market works. So you have to see through the bullshit. The bullshit today or yesterday was that it even went down just on news like this. That was the bullshit, because it should not even be down here. Even if they didn't drill, and if they drilled 100% dusters, it should already be up at, I don't know, 1.5 at least. So everything that's happening down here, in my opinion, is bullshit prices, bullshit selling. And it's driven by weak hands, trend followers, momentum traders, and traders. And some people look at this gap here. It's like, yeah, that might be what some traders think. That's like, yeah, I hope we can get this gap to fill. I mean, in a scenario where that would happen without an asteroid hitting Earth, I wouldn't even care if my very large position right now was cut in half from here, because I would be, again, assuming it's like an asteroid hasn't hit Earth, I would probably be piling in everything I possibly could. So then in the end, again, when we're talking about, is a decline a gift or a curse, even though Magna should be, I don't know, I think it should be probably closer to $2 at least right now. That this is, I mean, all of this is bullshit basically, because they might, they're aiming to be in, possible production already in like 9 to 12 months. And these guys have done it before. They literally had the best performing stock on the TSX when they were with FNX Mining. And they were cash flow positive from day one, which an article even reports was very unusual, because usually it takes years for a mine to, run well. Anyway, so that's the kind of team you have running the show, and they have 20 million in cash, so they don't need to raise anything anytime soon. Still, would it be a curse or not if it, let's say it went like this? If you sold here, yeah, that would be a curse, or you made it a curse. In my opinion, again, it's like I can't guarantee anything, but I hope you understand my reasoning here. That's why I've been starting to, add again. Had to sell some other shares, because this is just getting absolutely wacky. And you can see here just how oversold it is. So it's been a one-way street, and I have no idea who's selling here. But I don't think it's the people that make a lot of money long term. I don't know, but of course, if it were to go down even lower, I'm gonna look stupid. And if nothing really has changed, I'm just gonna keep on buying, while probably taking flag for saying that you would be stupid to sell here. But that's how it is. That's how it works. You have to be. I was going to say, I don't think it's even a contrarian, because again, if you just look at the implied value that was put on the Shakespeare deposit, this makes absolutely no sense. It's like 1 + 2 = 0.8. Green Hill is probably worth twice as much as Shakespeare, if I had to guess, given how they look now. Maybe not, maybe 1.5, who knows. Still, there's no way that this makes sense, that because it's not me who gave an implied value of the Shakespeare deposit alone at around this level. That was Mitsui. And if I think, if I remember correctly, after talking to the guys, it's like I think they thought that was too cheap for Shakespeare. So if that was actually, that value range was kind of, too cheap, or it's like maybe the upper range was something that they would be okay with, that would be 100 million. And in that case, this right now Magna's enterprise value is sub 100 million. It's at 90 or something. What is it? It's at 88. It's just absolutely crazy. In my opinion. And everybody looks stupid who was buying this downtrend as well. But good things tend to happen when you buy something dirt cheap, because the risks are to the upside. Can it go lower? Yes, it can go from dirt cheap to dirtier cheaper. It obviously could have gone even lower. That just means that the reversion to the mean would have been that more brutal to the upside. Just absolutely no guarantees. I don't use technical analysis to trade. Really, I mean, might happen sometime, but I think this still is a pretty interesting observation. Just that the last time, and again, this might be, who knows, an institution. I mean, this might just be weak hands. This might be traders. This might be institutions who have redemptions or whatever, so they don't even want to sell, but they're forced to sell because Magna is one of the few things they can sell. With some liquidity. Whoever it is, I think they're bringing gifts to any long-term value investor here. I mean, I see, again, like typically I see traders as subsidizing value investors. Another example of that, I'm working on a article on Brixton. I don't know when it's gonna be out. Might be a while, but still, it's like BHP invested here. Obvious resistance zone, has nothing to do with what the actual value of the company is, etc. It's just what traders look at, etc. Where they might step in and step out, yada. So it obviously didn't break this after last season. And I had this, I posted this a while back, I think. It's like, so not enough buyers to break out. And then people and traders and everybody else saw that, so they started selling, which gets other people to sell, because all of a sudden now it feels like, this is going nowhere and it's never going to go up, and the trend is down, and everybody gets another, I mean, people who start this downtrend might be traders, whatever, and then people, continue the downtrend simply because the trend is down. Obviously it makes no sense that Brixton is trading at this valuation, given that 61 million, and they have 7-8 million in cash or something like that. Let's say they have an enterprise value of 55 million Canadian, and for that you get Trapper, which probably might end up, I think, over 3 million ounces. That's like the background, not really margin of safety yet, but that's like, going up. And they're probably going to be drilling Trapper and Camp Creek, maybe Metla, not sure, but that looks super juicy, and you could listen to Quinton's latest presentation where he talks about Metla. Still, if we take away, 15 million for, I would say probably 20 million, 15 or 20 million for Trapper, we would be down at, let's say, 40 million. Let's be a bit conservative. 40 million enterprise value left for everything else other than Trapper. That includes Camp Creek, which got BHP interested, etc. BHP has a market cap, I'm guessing here, I haven't checked lately, I'm assuming like $120 billion. How big of a potential price do you think a $120 billion company, the largest mining company on earth, how big how big of a price potential do they need to see to even get involved in a junior and fund their exploration? I'm thinking at least 2 billion. At least 2 billion. So if you have 40 million in value put on, not even 40, because that, they have a bunch of JVs, etc. Yeah, okay, this is, I even, forgot about that. They have an JV with Ivanhoe Electric and another JV, which is obviously worth something. Still, let's be super conservative. Let's say 40 million is attributed to Camp Creek, because it doesn't matter. It just the example just becomes more absurd. Okay, so 40 million divided by 2,000 is pricing in a 2% chance of, a 2% chance at face value is reflected right now that Brixton has something worth 2 billion at Camp Creek. Basically, okay, the market is giving us prices which imply, the market is giving us odds which factors in a 2% chance of success of finding a BHP type target at Camp Creek. If they don't find it, or if they can't make Camp Creek work at all, they don't find any high grade core, they find nothing that would make anybody put in a block cave mine there, then we can strike Camp Creek completely. And then we will have Trapper, Metla, all the other projects and all the other joint ventures. And maybe Brixton should go down to 40 million. Something like that. Maybe. It's like, okay, 33% potential downside if Trapper goes into the toilet, and then you obviously, if Trapper really becomes a good gold deposit, that could be worth several hundred millions. But just thinking about the risk reward for the Camp Creek project. So if 40 million is priced in, what happens if they actually find something BHP worthy? Or what if it becomes abundantly clear after next season? Yeah, the risk reward right now, even in the high, and I'm not again, I don't love early stage exploration stories. I mean, I think one could call this to be that kinda, but you still have the Trapper in the background, etc. So you have a bunch of irons in the fire where there's probable potential, probable upside, or probable growth potential, and even huge upside potential, again, given that BHP is saying we like this target or your projects. And again, BHP, you can just kind of take that to the bank that they wouldn't care about anything less than 2 billion. So they're saying Brixton has $2 billion potential at face value in their project portfolio. And they don't obviously care about the Ivanhoe joint venture. I don't think they're in the habit of being a junior partner to Ivanhoe. Maybe not, but yeah, let's forget about that. It makes absolutely no sense. That's the thing. You see a common theme here in a few. It's like, and I talked about, Headwater is, I think, a prime example. It's like either Newcrest is absolutely brain dead or Headwater gold is cheap. Either BHP is absolutely brain dead or Brixton Metals is cheap. Either Mitsui is absolute brain dead or Magna Mining is just absurdly cheap. This is a time in the junior sector that doesn't come too often, where it's remarkably hard to overpay even for the higher quality stuff with third part vote of confidence or absolute world class team, etc. It is just absolutely remarkable. It's like I did a tweet yesterday. It's like you have one trader who's super bullish gold, you have one trader that's super bearish gold. It's like, okay, what do you make of that? It's like they're saying the complete opposite of things. Okay, no conclusion obviously. If you're just scrolling and see, okay, I'm supposed to be really bullish, and the next guy says I'm supposed to be super bearish. How much easier does it get than just, I'm a value investor and these prices are absolute ridiculous, retarded. Only a complete idiot with IQ 40 would think that these are not cheap. That's a pretty, I mean, there's no confusion in my mind at all. That Brixton is too cheap, Magna Mining is too cheap, it's like Headwater is too cheap on a risk-reward basis. I think Goliath is too cheap. Eskay is harder because it's really binary in a sense, because they don't really have that, you know, start of that discovery yet. But with that said, if they do find that this season, you know, that might outperform all the other stocks I've talked about. But it's, again, it's more high risk, high reward, as I would put it right now. So either there's going to be champagne popping, or we're going to be eating noodles after this coming field season. I'm obviously hoping they get that proof of concept with the geophysics target, and all of a sudden all the other geophysics targets are live, and it's like, holy hell, they might have cracked the code to find one or more of these Eskay Creek or at least Skina type deposits. Then we're talking. Then all of a sudden the implied, you know, the yeah, I don't know, probable value, let's say, of the entire land package just, you know, takes a quantum leap. Jury's still out. We don't know. I don't know. I have no idea exactly where any of these stocks are going to be trading. I just know that, to me, given, well, first of all, where the sector sentiment is, that's a chronic risk to the upside, because the sector sentiment can change on any day. And from these levels, there's a huge runway to the upside in sentiment alone. You know, companies not even doing anything and they still go up 200-300%. That kind of stuff. So that's chronic risk to the upside. That's going to happen someday. I don't exactly know when. But then you also have the fundamentals, etc. So obviously, if we're talking blue sky scenario in, like, let's say 2-3 years, that all of these companies end up making discoveries or confirm that their discoveries are significant discoveries, and they grow, and we go into a higher sentiment environment, we peak out within 2-3 years. I mean, that's when you can get 500 to 1,000% returns, and it's a lot easier the cheaper you buy. That's just how it is. Yeah, thanks for listening. Consider me biased. Eskay Mining are sponsors, Goliath are sponsors, Magna are sponsors. I own shares of all companies I mentioned. Do your own due diligence. Don't treat this as investment advice. Don't invest money you cannot afford to lose. This is a high risk, high reward business. Don't go all in on any stock. Don't invest money you'll need anytime soon, because it's almost kind of, I was gonna say, kind of pointless, because we don't know when the sentiment will change, and that's where the, you know, easy big money is, and we don't know when that's gonna. I mean, it would suck if we go into a high sentiment environment and there's no, you know, you have to sell out at these ridiculous prices. Well, it's, you know, it's around the corner. You have to sell out, because then it's kind of a time gamble, sorta. Yeah. Anyway, thanks for listening. Bye bye.